Hello, folks, and thank you for joining us for another Crypto Roundtable Series episode. Really happy to be here today, and I have my colleagues and co-hosts Ryan Gorman and Danish Chaudhry. We're here with a really special guest today, and I'm really excited about it, especially that he took time out of his busy schedule. We have CEO and founder of Celsius Network, Alex Mashinsky. Alex, thank you very much for being here today.
Thanks for having me, guys.
Absolutely. You know, the first thing I'd like to do, just to lay the foundation for everything, you know, you're in the media a lot. You're very approachable, and I want a lot of people know who you are and think they know what Celsius is, but I really want to just lay the foundation for them. So I'd like to ask you, before we start, can you just share with the audience who you are, why you moved from traditional banking to the crypto world, and, you know, maybe include a few background on your entrepreneurial tech startups, because I know you've been very successful in those.
Sure. So, you know, I always joke that it took me 30 years to become an overnight success. You know, but Celsius is my 8th startup. So I have 6 kids at home. I'm all keeping them quiet over there. And the 8th startup, right? So like a serial entrepreneur. Came to this country as an immigrant with nothing, and built it all up from scratch, living the American dream, right? So I raised over $1 billion from VCs and 2 IPOs, 2 unicorns. These are companies worth over $1 billion, and but all these companies were things where I did good and then did well for myself as well. So like Voice of IP, a company I started, Arbinet, back in 1994. Wrote the patents, the protocols, what we're using here on Zoom right now. And now 4.5 billion people use it for free, right? So built a company on NASDAQ that was worth over $1 billion. So all these things are what everybody in the world is envious of us in America, that we get to come up with an idea, run around, raise some money, build a company, and become a dominant player around the world. And crypto is no different, right? Crypto is like this vision that we can basically replace the banks, right? The banks are not your friends, and you can basically replace that with something or someone that's acting in your best interest. And for me, that is what crypto is all about. That's what decentralization is all about. And I'm very excited to kind of like focus all my energy in building that for the future.
That's great. Thanks for that. You know, how did you come up with the idea to pay interest on Bitcoin and create Celsius, you know, from the beginning?
Yeah, so we live in a world where, you know, like when I came to the United States, I live here in Manhattan, just a few blocks from here. I remember walking into Citibank and earning 7% interest on my dollars. I just deposited the dollars I had, and this was 32 or 33 years ago, right? So that was the norm, that you can earn money on your money. But today what happened is, because of the Fed and because of all these other things that we're doing, interest rates are either zero or negative all over the world, right? We used to laugh on Japan and Europe about how these guys have zero rates and negative rates. Well, guess what? We're there today. And the Fed is doing exactly what the Japanese central bank or what the ECB has been doing for the last 10 or 20 years. So I think it's like a disease, no pun intended, with the coronavirus, but it's like a disease that is taking over the planet, where we basically taking money from the poor, from the people who are saving, and using that money to subsidize the banks and subsidize large companies. And that's just not, it's the opposite of what should be happening. So I decided that we can use decentralization, the blockchain, and specifically Bitcoin, Ethereum, and so on, to earn interest. So we took all the best secrets from Wall Street on how you make money on money, and we created this amazing company for the people, right? I didn't raise, this is the first time, Celsius is the first time that I did not raise money from VCs or private equity or whatever. I took the money from the community, right? We did an ICO, and we built a product for the community. So now, and before Celsius, no one paid interest on Bitcoin. You couldn't just go deposit in Bitcoin and earn interest. So now now everybody looking and says, oh, of course, but just 3 years ago, that was like a crazy idea. And everybody was like, yeah, you can't do that. It's not going to scale. You can't earn Bitcoin on Bitcoin. So now we're also adding gold. Now you can earn gold on gold, okay, for the first time in 5,000 years. So, and that's the whole idea about the blockchain, is that you can innovate and create things that never existed before, things that could not be put together in the traditional financial world.
So thanks. That's actually a really good explanation and how you got started. I think one of the questions that the community kind of have is like, how does the lending work? Because like, from a traditional perspective, like we're all from the traditional background, traditional finance background. So we know like, people deposit cash and there's traditional lending that goes out to other businesses and other people and so on and so forth. And that's where the interest comes from, sort of thing. Specifically in the Bitcoin and the blockchain space, how does the lending work? How is the interest generated? And how do people know that, this is actually just as legit as something that's in the real world and not just,
Sure.
anything else? Yeah.
Sure. No, it's a very good question. And look, Celsius is priding itself of being more transparent than anybody else. So we're not just telling you how it works, but we also publish in real time. You can see here, I'll share with you. You can basically see right inside our app how many people are using it and how much is on deposit and how much did we earn and who got it and so on, so on. So full transparency on basically on all these pieces that you're talking about.
And you also have your unofficial fan club, I don't know another way to phrase it, the Celsians, who actually do an attestation for you guys on what your assets are, correct?
Right. So yeah, Celsius.com is a community effort to audit us, and they pull data from the blockchain. So basically, like when we say, okay, we have 80,000 users, they go and they check, are there 80,000 accounts that were created, right? Because each account is a unique address. Did Celsius actually do these loans? Like when we say we did 6 billion in loans, they're like, okay, let's track all the transactions, right? You can see how many loans are issued and so on and so on. So what they do is they audit through the blockchain, since the blockchain is available to anyone, and they audit the numbers that we publish. And some things they publish that we don't even advertise. Like they figured out exactly our growth rate and how many people are joining, how many people are leaving. So in a way, they do even a better job than we do. But going back to your original question, so like I said, I stole the best secrets from Wall Street. So before, like if you look at Fidelity or Charles Schwab or any of the traditional guys, most people, if you ask the average American, they'll say, oh yeah, they make $4.95 on the trade, right? They buy a share and they make money on the trade. But the reality is that most of the money that these companies make has nothing to do with, now they charge you zero, right? Recently they started charging nothing. Yeah. Most of the money they make is from a service called SEC lending, right? Securities lending. And most people don't know that. Most people don't know that, for example, if you bought a Tesla share, that share is being rehypothecated or lent out by your broker dealer to the people who either do market making or shorting or anything like that. And they charge hefty fees, 15, 20, 25% per year for that stock to be lent out.
That's a Robinhood goes commission free, right? That's why people are like, oh, how am I not paying fees? Because they're doing SEC lending in the back.
Well, it's a race to the bottom. And I want to interrupt for a second. I'm glad you brought up SEC lending because a lot of people do not understand it. So how you're explaining it is going to resonate very well.
Yeah, so SEC lending is the secret of Wall Street of how they make money, right? And we basically took the same service, and instead of SEC lending, we did bit lending. So we are lending coins, and so we aggregate 85,000 users who basically give us their coins, mostly Bitcoin, but also Ethereum, Litecoin. We have 26 different coins. So we have a giant bucket of Bitcoin. For example, we have, I think, something like 26,000 Bitcoin, more or less, right now. And from that omnibus, we lend out to institutions, right? So our customers are 230 institutions that we onboarded. They're all KYC, AML, and so on and so on. And then we basically lend them out. So for example, Galaxy Digital is a customer, right? Genesis is a customer, and so on. So all the big guys on Wall Street that are in this community are normally would be borrowing assets from us, paying us interest. And what we do is something very simple that no one has done before, right? We take, let's say we earned $1,000, we will take $800, buy Bitcoin with it, and then give it to our community pro rata. So if you have 1% of that bucket, you will earn 1% of the total interest that we earned, which represents 80% of the total revenues that we generated. So if you think of an average bank, the banks do exactly the opposite, right? When you go to a bank and you deposit your money and they lend it out to your neighbor, right? They lend it out and on the credit card or for a car loan or a mortgage. And they keep almost all that profit. They give you nothing because that's why they pay you no interest. And all that profit goes to the shareholder and to the bank executives as bonuses and buybacks and things like that, right? So
are you referring to the incentive that you pay the sell holders? Why there's a marginal difference in return?
Well, I'm saying that the Celsius model is about returning as much as possible to the depositor, and the bank model or the broker-dealer market is returning as much as possible to the shareholders. Yeah. So I'm just explaining that for that is a fundamental difference between what I think the blockchain and cryptocurrencies need to do and what actually is happening. Today, unfortunately, most of the players in the crypto space, if you look at Coinbase or Binance or whatever, they're in one form or another, they are a toll collector that looks, behaves, and acts very similar to any Wall Street firm. They have not changed the business model, right? And my point is that if you really want a financial revolution, if you really want to create something for 7 billion people that really acts in their best interest, then why are you copying what Wall Street does? You know, like just create a whole new business model. And what we proved is that you can give 80% to your community and still be profitable, right? Celsius announced that we were profitable for 2019. We're profitable now. We had 0 liquidations during this flash crash. So our model has worked very, very well compared to the Wall Street model or compared to the DeFi model.
That's awesome. I think thank you for that. What regular people don't understand is when they submit their money, deposit their money in a regular bank account, people think that they actually take the cash and put it and it's just sitting there somewhere. They don't realize that the bank is using that to lend it somewhere, keeping all the profit and giving them nothing. Right. So that's very, very
exactly. Just to say the same thing you just said, when people use their credit card to borrow money, they think they're borrowing from the bank, but really they borrowed from their neighbor.
Exactly.
The neighbor got nothing for that money. They pay you pay 24% on your credit card, and they pay nothing to the depositor. You know, it's just crazy. How do you think JP Morgan made 36 billion in profit last year? 36 billion. You know, they did that because they're paying you nothing for the money.
Right. You know? Exactly. It's free money.
Exactly.
It's like it's that lack of transparency that Wall Street has thrived upon. Like I used to be at Wall Street sort of thing, and there's just nobody knew what was going on. I used to be at BlackRock. We had the largest SEC lending desk, and it's just like nobody knows outside of it that happens and what goes on. And good that you touched upon it. What I really wanted to actually ask you was like, how did you survive? Like, glad that you survived the flash crash sort of thing. Is that because your model of lending out is really robust, that you make sure that, because we saw a lot of like market makers just got liquidated immediately, right? Like literally all the BitMEX books were empty. Most of the largest funds just got liquidated. So how did you survive, given, I'm sure like there was, you know, institutions that you were lending out to that were impacted as well?
Sure. So you're right. I mean, BitMEX liquidated over $1 billion. Basically, they completely eliminated all of their long customers. Right?
Oh yeah, it was gone. Like
it was a bloodbath. Poof, like this, $1 billion. But look, all these guys are also tourists who came to crypto land thinking that they can just generate easy profits, and they got flushed, and now they're on a plane back to fiat land. Well, not on a plane. They're walking there. I guess you can't fly anywhere. But
hitching a ride now, yeah.
Yeah. So look, for us, I mean, we are. There are crazy guys out there that lend with no collateral. We don't do that. So we have very tight controls. And so we always have either a lot of fiat or a lot of coin. And about, I would say, up to about a month ago, everybody just wanted fiat, right? We had plenty of coins. And then it flipped on its head.
Everybody wants Bitcoin.
And now everybody wants Bitcoin and no one wants fiat. So when you're on both sides of those trades, then you don't have a problem. You can flip them very, very easily because look, the 230 customers we have, they're all fiat denominated, meaning they took money from their investors, they promised returns in dollars, and then they came to the crypto world and decided to do arbitrage or whatever. And that's why they're borrowing assets from us, because they want to offset the risk to Celsius, right? And it's fine because Celsius, all of our customers already took the risk. All of our customers are long only Bitcoin. Yeah. So for us, it was very easy to lend out Bitcoin and take dollars and sit on dollars. So when the flip happened, when the flash crash happened, everybody came running to us and said, do you have dollars? And we're like, sure, we have plenty of dollars. What do you need? You know? And we just charged a lot of money for it, right? So they all returned their Bitcoin and we gave them dollars. Great. I love that trade. It's the opposite of what I usually do, but it works just as well. So our system works this way, right? And we do billions of dollars of that every few months. If you look at DeFi, DeFi works this way. What happened with DeFi? DeFi pumped up $1 billion worth of securitization. They created DAI by putting more and more and more ETH into a smart contract. And then when the market flipped, they liquidated all of it, just like BitMEX, right? They liquidated like $500 million worth of DAI holders, and all these people paid 60.
That was such a crap show.
Exactly. So it proved that the model doesn't work, and now everybody's running and say, okay, we're going to add USDC. Well, you're supposed to be decentralized. What are you adding a centralized coin for? So Celsius had that. We had USDC and TUSD and GUSD. We have 12 different stable coins for 2.5 years, because we've said for 2.5 years that you cannot operate just in your own little world called DeFi and think nothing's going to happen.
Well, so, that just reminded me. Do you have HUSD?
And we were talking about adding it in, but I don't think it's live in the wallet right now because we need to make sure there's liquidity. But yes.
Well, you got the man right here, so you guys pick it up after the show.
Let's do it. As long as there's demand, we're game, you know. But we mint TUSD, for example, or USDT or GUSD, so we can issue that on the spot. And
really? So you just take deposits, you can issue like Tether or whichever yourselves?
Yep.
You don't have to go to Tether Treasury and like.
Well, we obviously do, but I'm saying very few people can actually issue it. All these people only trust very few partners.
Yeah.
So we can move these things very quickly.
Yeah.
We can give you credit on BitMEX. We can give you credit on Binance. We can give you credit on Bitfinex and so on. So a lot of our partners use us because if you try to move coins during this collapse, nothing moved.
Yeah.
Went to Celsius, you can immediately go long or short, whatever you wanted to do, because you can get credit for us because we're holding assets for you somewhere else. So these are things that no one else, I don't know anyone else is doing that today, but we do that instantly, and we do it in a very efficient way, which gives our customers a much faster way of getting in and out of positions. And look, you can come to Celsius and borrow $100 million. You don't have to go to 10 places and borrow 10 million. So that is the liquidity is a very important piece of this, because in this fragmented market, there aren't a lot of people that can give you a $100 million Bitcoin position or give you $100 million in cash. So these are the advantages that kind of differentiate us from a lot of other players.
Alex, I want to go back to something you said a little earlier in the conversation about the Fed rate being low and not really earning any interest on your money, your deposits. Can you talk a little bit more about how digital assets can be a solution to uncontrolled money printing by these centralized banks?
So, I was in the FinTech World conference, and it was February 20th, I think. And I did this big presentation, like a 60-slide presentation about how we're about to hit the wall, and people are actually physically laughing at me in the.
I watched it. It was great.
Yeah, they were like, this guy's crazy. What is he talking about? The end of the world, you know? And then I think it was February 27. I posted a Twitter post showing a bubble and a pin, saying the coronavirus is the pin that's going to pop the bubble. So look, nothing matters until it does matter, right? And the problem we have, I don't have this chart here, but if you look at the Fed and what the Fed has done over the last 100 years, you would see that in the first 100 years of their existence, they printed only $900 billion in 100 years. And then since 2008, they printed $3.5 trillion in 10 years. And now they're printing $5 trillion in 1 month. Okay, so we went from 100 years to 10 years to 1 month. Okay, to a balance sheet that is close to $10 trillion. So that is an unsustainable inflationary cycle, right? And what most people don't understand is that when they're looking at the consumer price index and they think that there is no inflation or low inflation, that does not include the inflation of money. And the inflation of money is what's eating you alive, right? If you look at the dollar since we went off the gold standard, since 1971, the dollar lost 93% of its value. And if you put a chart of Bitcoin against the dollar, you will see that the dollar lost 99.9% of its value against the Bitcoin in the last 11 years.
It's not even a fair race.
Not even close.
But the point is that measures the inflation of money. And unless you're in the money business and you know how to have your money make money, which most people in the world are not, they don't know how that works. Most people know that I take my time, I go to work somewhere, I exchange my time for dollars or yen or whatever, and then I have this other fiat currency with which I purchase other items, right? So that effort is getting diluted and eaten away over time because the value of money is decreasing so much. So basically, the Fed is saying we are going to take all the savings away from retirees. We're going to take all the savings away from anyone who's working for a living, just so we can maintain this Keynesian bubble that we created, that we've been pumping since the early 80s, right? So every time we reflate ourselves out of trouble, we need 10 times as much money to do that, right? My point is, just the punchline, right? My point is, look, I love America. I'm an American. I'm not saying all these things like, oh, this country sucks, and all of you guys are, you're gonna.
You're one of us now, okay?
I'm saying that's not what I'm saying. What I'm saying is that recessions are part of the cycle, and instead of letting recessions re-engineer our economy, right? So, for example, this recession that right now we're going through, which might be a depression. Instead of letting the bad companies fail, like Macy's and all these retailers that we're going to bail out, we should let all these things fail, and we should take all this precious money that we're printing and invest it in the future, which is artificial intelligence, machine learning, blockchain, and so on and so on. So when we are bailing out the airlines, when we're bailing out the cruise companies, when we're bailing out the retailers, all we're doing is we're prolonging the disease. We don't want to take the medicine. And that is my main beef with the Mnuchin's plan and the Fed's plan and everything else. That really what we're doing is we're hurting America because we're trying to make the pain less painful for the average company.
One more.
Sorry, go ahead.
So it's true that the dollar is decreasing in value over time. It's a steady downward slope, right? It's not quite the same as Bitcoin halving last week or 2 weeks ago, right? What would you say to someone who points that out and says, well, I mean, my dollar might be losing value, but my Bitcoin holdings could lose half their value overnight. How do I go about combating something like that if I move into digital assets?
By the way, he was referring to the reverse halving, not the real halving.
Actual halving.
Yeah. So look, if you take it from a 1 week or 1 month snapshot, you could see a huge up and down and so on. But so I don't think that represents the value creation in Bitcoin. Bitcoin, if you take a 1 year or 5 year or 10 year snapshot, you will see that Bitcoin outperformed any other asset class. So over an 11-year life cycle, it is proven that is an exceptional store of value, right?
Yeah.
So does it have, is it a volatile store of value? Of course it is. It's an extremely volatile store of value, but it's an exceptional store of value. It's better than gold. It's better than anything else. So now it's a tiny little community, right? 45 million users out of a universe of 7.5 billion people on this planet. So what we have not proven yet, that it is an exceptional store of value for a mass population, right? So, but are you asking me if I'm concerned when Bitcoin drops by 50%? No, I bought thousands of Bitcoin, you know, on BitMEX for, you know, when the spread between BitMEX and Coinbase was $800. I was like, of course, I'll take that for free. I mean, come on. How much can I take? You know? How much can I buy? There were no sellers on the other side, you know? So, but the point is that yes, the Bitcoin does behave in abnormal fluctuations. And in those fluctuations, it does price itself in a very ridiculous way, which it should not. But that has to do more with the fact that we have too many speculators and nothing to do with the fundamentals of the Bitcoin.
I think it's more about mass adoption, right? Because if you're going to have these wild swings in value that you don't have in fiat currencies, which people are used to and comfortable with, even gold doesn't swing that wildly. I mean, how do we get to a point where we kind of smooth out these areas of volatility if we're going to use it as a store of value versus comparing it to like a traditional asset class like equities, and catalyze that mass adoption to a broader user base that makes it more liquid?
Right, right. So look, the stock market, the world's largest stock market, which is half of the entire market cap of the entire planet, was very, very stable for 15 years. It was going up 0.25%, 0.5% every day. And then it crashed by 30% in a matter of what, 2 weeks, 2.5 weeks?
Even,
right?
yeah.
So no one would have predicted that. Yeah. If, you know, that you could have bought puts, and I did. I bought puts in January and in February, at like 1% deviation, like nothing. It was free. You could have bought protection for free. You know, the indexes will go down 20% or more, right? Try to buy them now and see how expensive they are right now, right? So, so the WIX went up 10x, because before that, no one believed that anything like this could happen. So my point is that what you used to see in Bitcoin is now happening in every other asset class. Oil dropped by 50%.
Yeah. S&P opened like immediately like 6%,
so,
which was weird. But yeah.
Yeah. So all I'm saying is that Bitcoin no longer looks like the most volatile asset, right? And today I agree with you. I think most of the people who are in Bitcoin are people who can tolerate that, right? The Celsius community is a hodler community. We have not seen any withdrawals. We didn't see anybody go, oh my God, March the 20th, Bitcoin is down 50%. I'm withdrawing and selling everything. No one, right? And we have 85,000 users. What we've seen is the opposite. We've seen them buy and deposit even more because they basically averaged down, and now they've improved the yield and so on. And obviously, as the coin came back, they've done very well. So I think the speculator is the one moving the prices. The majority of the community is the hodler community. It's like the Celsius community.
Yeah. Let me ask you this: for the people that are watching and they're not quite sure how it works, because I do, you know, your app and the process is really simplistic, right? I mean, you want to talk about mass adoption. You guys are a part of that, just making the whole scenario easy. But what is exactly the lending process of Celsius? How does that work? How does one go from saying, you know, what Alex is saying is really interesting, to downloading the app, to how it's the mechanics of it?
Sure. So before Celsius, you only had very, very few options. You were either storing it yourself, you held the keys yourself because you knew what you were doing, or you said, you know what, I don't know what all this is. I bought my coins on Coinbase. I'm just going to keep them on Coinbase. These were basically the two options. And Celsius said, no, we're going to give you custody with some of the best custodians out there. We use BitGo, Prime Trust, we use on-chain, Fireblocks, and so on. And we will also rehypothecate those assets, and we will give you 80% of it. And all you have to do is download the app, do KYC AML, and just deposit your assets. You don't have to trade them. You don't have to move them around. You don't have to know how the markets work or have accounts on 10 different exchanges or whatever, right? All you do is you take your favorite assets. They're either stable coins, they're the main coins like Bitcoin, Ethereum, and so on, or they're staking coins, right? These are the kind of 3 families that we have. Each one of those families earns different yield based on demand, and you get more of the same, right? So you don't have to even know what Cell token is. You have Bitcoin, you earn Bitcoin. You have Ethereum, you earn Ethereum. You have USDT, you earn USDT, right? So it's very, very simple. And you can earn, for example, 9% on USDT, right? Or on TUSD or USDC or any of the stable coins, right? So you can take your dollars, you give them to Coinbase. Coinbase puts them in an FDIC insured account, gives you a token, you deposit the token with Celsius, and that token earns 9%. And at any time you can go back to Coinbase and redeem both the principal and the interest. There's no lockup, there's no withdrawal fees, there's no origination fee, there's no loan contract to sign, nothing. Because you either believe we're acting in your best interest or you don't, right? That's the main kind of hurdle that most people have to cross. And when we launched, I can tell you, most people said to us, Alex, you're wasting your time. No one is going to trust you with their keys. No one's just going to hand off to you their Bitcoin, right?
And $6 billion later, what's the answer?
We have just over 600 million in assets under management. Yeah. And it's growing like whatever. A few days ago, we had like 13 million in deposits for the week. I think this week we're going to do something like 10 or 11. So we're adding a lot of assets, users from all over the world. And we're about, I would say 40% US, 30% Europe, and the rest is like another 150 countries. So it's not just North America. It's not like we're only serving the fancy, rich New Yorkers, you know?
What's the amount of loans you guys have originated since inception?
Just over 6.2 billion.
Okay, nice. Where are you seeing the most growth?
Yeah, so let me just explain the other side. So the main business is coins come in and we lend the coins out. We earn interest, we give 80% back. The second part of the business is lending dollars, right? So you want margin borrow, just like you can borrow dollars from Fidelity to against your Facebook stock or Apple stock, right? Without selling the stock, we do the same thing for digital assets. So if you have EOS or Bitcoin or Litecoin or whatever, you can park it with us and it's either earning interest or you can take a loan against it. And the loan against it, before Celsius showed up, companies like BlockFi and Salt charged you 24% to borrow against your coins. So it was an asset-backed loan that on Wall Street goes for 4 to 6%, and they charge you 24% as if it was a credit card unsecured loan, right?
Wow.
And Celsius, yeah, that was the market. And Celsius showed up and said, no, if you're going to act, if you want to build this community and you want to add the next 100 million people, why are you ripping them off exactly the same way that Wall Street is doing to the average Joe? So
have you felt that you're a market leader in setting what the tone is now?
Yeah, we lowered the rate to 4.95%, less than 5% for margin borrow against your asset, right? And what does it do? It helps people not sell the coins. So now when they don't sell in the coins, that lowers the volatility, right? And so on. So all these things are beneficial for the community, right? And again, in the app, everybody can see, well, how many loans other people did. Are the number of loans increasing or decreasing? So you're part of a herd now. You don't have to make decisions by yourself. You're part of the hodlers herd, and you can see, is the herd buying more coins? Is the herd taking loans? And then you can basically feel much better that there was no place for hodlers to show up. Believe me, Binance is not a place for hodlers, right? That's a place for speculators. BitMEX is not a place for hodlers. So really what Celsius created was the community for hodlers, right? And all the services we're adding are services hodlers need because they couldn't find it anywhere else.
That's great. We're seeing like the growth, like region-wise around the world? Where's the most adoption happening at the fastest rate, I guess?
So it varies. I mean, I think first we're blocked in a bunch of countries. So we're like completely blocked in Japan. We're waiting for our partner to launch over there. So any country that kind of said you need a full license or it's illegal to do the services, like until recently India said it was illegal, we blocked all those jurisdictions, right? So most of the growth has been English-speaking countries because most of my team speaks English. Most of our content is in English. So that was like the easy, fast adoption. But when you're seeing these, sometimes you will see a wave of adoption and a flood of people, for example, from Turkey. So after the government devalued the currency overnight by, I think, like something like 50%,
Yep.
right? We've seen a flood of people from Turkey signing up and say, hey, this is my first Bitcoin. I don't want the Turkish lira. I want a non-correlated asset class, right? So Argentina, Turkey, Philippines, a lot of these countries, you will see them come in and go based on events that happen in each one.
Interesting. So geopolitical risk that does factor into the signups, you're saying?
Yeah, and look, we have very high bar, meaning we require full KYC, AML. We ask you for a social security number. We lose 60% of subscribers right in the front because when we start asking these questions, they go, I'm not giving you any of this information, you know? So really, we also cleaning kind of like the community. We don't want the bad apples. We don't want the scammers. We don't want the people who are not there to help the community. And if you go on our Telegram channel, right, at Celsius Network, or you go to our Twitter account, you will see an extremely vibrant community that is talking to each other and is sharing good things, bad things. Like the community came to us and said, why aren't you paying a compounding interest? And we delivered it, right? We put compounding interest. They came and they said, okay, we want to add these other assets we don't have in the wallet. And we went ahead and added those assets. So we do, I think, a pretty good job of listening to the community because we're doing it for them, right? I mean, we're building a service for them.
Of course. Joy, I was just going to ask, good that we spoke about the markets and what's happening right now, and you have a very good insight as to, you know, what's going on right now. We'd love to hear your thoughts on like, given we've spoken about the traditional markets and how they performed over the last couple of weeks, 3 weeks sort of thing. Are we, and S&P open, like up 6%, 7% on Monday, like, is this just a dead cat bounce, as they say? And are we headed deeper into recession? Like general market thoughts, especially given, the pandemic and like what's happening. And secondly, given the market outlook, what is your investment portfolio right now?
Right. So I did cover my shorts. I covered them too early. Actually, I did not expect the indexes to go down as much. And I did expect kind of a bear market rally. I did not expect it to be this high. So if it's a spring and it was stretched too much to the bottom, it also came back. It jumped much more than we thought. I don't see a V-shaped recovery. And I know, look, everybody wants a V-shaped recovery. I want a V-shaped recovery. It's much better for me to go back to where we were before, where no one is afraid of anything and all the bulls are running in the streets at full speed, versus where we are today. But the reality is that if you think of coronavirus, right, it's unlike any event that has ever happened in modern economics. We never had an event that stopped all of the supply and all of the demand at the same time. In most recessions, and I've lived through 4 of them, you have a segment of the economy, the tech bubble, or the banking bubble, or some other bubble where a segment or housing bubble, right? The segment of the economy is having problems. That segment has indigestion. That segment is the one that's suffering the most. Everybody else is just muddling along. Yeah. Here, we have a complete shutdown of all the wheels from turning. And because of that, there's no way that you just press a button. We haven't even allowed everybody to go back to work. So even, let's say tomorrow morning, everybody is allowed to go back to work. Your supply chain got disrupted by 4, 8, 12 weeks. Yeah. Right? Thousands of people are dead, many in different key positions and so on. So there's going to be tremendous impact and all of us have to get infected until they have a cure, which is at least 12 months away.
Yeah.
It doesn't matter if we do social distancing. Unless you have antibodies inside your bloodstream, you are not cured from the disease, and sooner or later you're going to get this virus. So we are just
these two got it.
We got it.
We got it. I'm just getting over it now.
All right, send me a plasma. I'll send me a plasma. I'm put an IV. But look, viruses. Most people slept through these classes in high school or in college, but viruses are on this planet for 4.5 billion years. We're on this planet for less than 100,000 years.
Yep.
So something that survived 4.5 billion years of evolution and is thriving, and there's hundreds of thousands of types of viruses, and we think that the coronavirus has never existed in history. It's a brand new virus, okay? Yep. It can mutate 100 times, So anyone who thinks it's just like, I'm sorry, but when the president says all kind of things that, it's just a flu or we're going to cure it tomorrow. The AIDS virus, we've been fighting it now for 40 years. We cannot eliminate it still after 40 years. Okay. And we have every medication you can think being thrown in it. So all I'm saying is that this is not going to be a V recovery. It may be a W recovery, or it might be an L recovery.
No.
And this is just a bear trap that a lot of people are going to be.
Yeah, that's what I think too. I think we were just speaking about this last week, and I think this is what we're feeling right now is the blow off top over the last 10 years of the street partying, like after the last bailout. And now we saw everything was overheated. It had to cool off. Yes, it was a little bit more extreme than we needed it to, but the impact of the virus has not been felt, and we have to wait like 6 months to a year to see that effect, sort of thing. Right? So it's not.
And you have $100 trillion worth of debt that has to shrink, because all that debt, while our economy has dropped by 30%, the debt pile has not dropped. It's still there, and the debt payments are still there. So a lot of equity is going to be swapped with debt, and none of that has happened yet. Almost no one has declared bankruptcy yet. So that cycle still has to play out, and it's going to be very painful, right? Because we've never had a bubble this size.
Yeah, definitely. And so I guess the second part was like, what is your investment portfolio? Like, what is your home? Are you gold, Bitcoin, and Celsius token, obviously, or are you traditional markets at all?
So I'm slowly shorting more and more. I'm shorting the high yield bond market, because I think there's a lot of pain that's going to be there. I'm shorting the SPY slowly into it. Again, today the market is up 3 or 4%. Okay, fine. I'll short more, So I have an allocation, maybe, 50%. Part of it is just the index, and part of it in options. I have a lot of gold. Some of it in this triple gold.
Like physical or like triple?
No, I only do financial instruments.
Oh, okay.
Physical. But I'm saying, like, some of it is just one-time gold, some of it is a triple gold.
Right.
And a little bit of leverage from that. And then I have a big Bitcoin position that I've had for a long time, which is really long. Long. Which is, again, when it drops below 5,000 or whatever, I usually add to it incrementally, meaning the lower it goes, the more I add, and then I just hodl. So look, I created Celsius because I, as a big Bitcoin holder, didn't see it moving, didn't see the community scaling. Yeah. For some reason, everybody else thought that don't worry about the size of the community. All we need is for the price of Bitcoin to go up. And I'm like, no. The price of Bitcoin is directly correlated to the size of your community. And so I created Celsius to really scale the community. Our mission is and was to bring 100 million new people into the blockchain, right? So that's really and it's a selfish reason. I'm doing it because I want my Bitcoins to be more valuable.
Yeah. Of course. That's a great point to wrap this up on. Alex, thank you very much for your time today. We appreciate it.
Thank you, Alex.
100,000 views, guys. Okay, we're not going to accept
Slowly
anything
coming
less
up.
than that.
Maybe we'll put this on TikTok and it'll take off, sort of thing.
Exactly. Yes.
Well,
Thanks,
you have a
guys.
busy schedule for sure.
Yeah. For more about Celsius, go to celsius.network to view their website. You can find them on Twitter @Celsius Network, or you can find Alex on Twitter @Mashinsky.